Joining me for a look at what's playing out on the market scene at midday is Annatjie Van Rooyen from MyWealth Investments. Annatjie, thanks so much for your time. Let's start with that hot inflation print accelerating to a near 2-year high in January. That just, solidifying the Fed's stance when it comes to standing pat on rates, right?
Good afternoon and thank you for having me. Yes, that CPI print came in hotter than expected yesterday. The headline number came in at 3%. Core inflation came in at 3.3%. The monthly increase also higher than expected. For the core number, it was 0.5%. The Fed chairman at his second day of testimony in front of Congress, he was actually reiterating that there's more work that needs to be done on the inflation front, as we are currently navigating quite an uncertain environment with policy implementation by the Trump administration. So the market has already discounted that rates will be on hold until the end of the year. So not much of a shocker there, to be honest with you. And the main reason for that CPI print, 2/3 of that came from groceries, and I think the main item there was eggs. The price increased by 15% due to bird flu, and then also those wildfires that they had in California must have influenced those numbers because a lot of vehicles had to be replaced, and I'm certain that that had an influence on the numbers.
Annatjie, I hear you saying it's not, a shocking print, but should we be scared, particularly here in South Africa? Looking at what Governor Lesetja Kganyago said at his last meeting, he did, price in some of those global risks, also looking at scenarios when it comes to tariffs and that leading to higher inflation. Should we perhaps start pricing in holds here at home?
Look, at this point in time, our inflation is under control because it's within the target range of the Reserve Bank. And the governor of the Reserve Bank did say if something bad was to happen, he looks at 5% for inflation, which is still within the target range. So I don't think we should go into panic mode just yet, but one should keep a close eye on the data as it comes out. And always keep a cool head and analyze the numbers and watch what Trump is going to say next, because he's already dominating the headlines again today. But today it's very positive because it's a possible resolution for the war between Ukraine and Russia.
We'll be watching how that unfolds, but I want us to now look at the UK economy. Numbers out there, growth numbers. That economy barely growing, Annatjie, up 0.1% in the fourth quarter of 2024, above economists' expectations as they had predicted a contraction. What's your general sentiment towards that economy, considering that here at home we also have a number of locally listed companies with operations within the UK?
Yeah, look, the UK market's been battling for quite some time, and a lot of fund managers didn't have large exposures to the UK, but I think those exposures are starting to increase now. And this GDP number was a surprise to the upside. We expected for the quarter that number to come in at minus 0.1%, but it came in at a positive 0.1%. And it's the services and manufacturing sectors that came to the rescue. The cost of living in the UK is very high. So I think the aggressive loosening of the monetary policy, like we've also had and the US had over the past year, I think the effects of that loose monetary policy is now starting to filter through to that economy, which is positive for them. So I think the possibility is still there that they can enter a shallow recession. I don't think they're out of the woods yet, but we'll monitor the numbers as they come out.
Let's take a look at some company news, starting off with British American Tobacco. So regulatory hurdles and the court case in Canada really clouding the results because they did return to profitability. It had to account for a £6.2 billion in connection with the lawsuit and its warning of tax-related headwinds in Bangladesh and Australia. Last time I checked, that share price was down over 7%. Markets really not liking the update. Are they just pricing in the losses to come this year?
I think the reason why the market's not liking that results because the adjusted profit from operations came in lower than the consensus forecast provided by the company. That is the main reason why I think the market's so disappointed.
All right, and what did you make of those numbers in general?
Well, the revenue is down 5%. They say that's mainly driven by the sale of those businesses in Russia and Belarus, but they are facing regulatory headwinds. But then on the positive side, they are in a position of leadership when it comes to new category products. And I think that supports the investment case for this company on the long term. So if you look at the valuation of the company on a forward PE of 8 and a dividend yield of 8%, it's not a demanding valuation. So there is a case to be made for the longer term, and they say that they remain committed to revenue increases of between 3 and 5% and profit increases of 4 to 6% by 2026. So if they can achieve that, then there is an investment case to be made for BTI.
Now, in the mining sector, South32 delivering strong half-year numbers. They've pointed to stronger commodity prices. They've also raised their guidance for the year for most operations, except for Mozambique, due to the civil unrest. Just your analysis of those numbers.
If you look at one point this morning, that share price was up 6%. So that result was very well received by the market. And they have increased their revenues by 25%. The copper division alone made profits of $98 million. They're lowering their capex by $95 million. And of course, they're capitalizing on the increase in the price of aluminium and copper. So the fact that they remain committed to their full year guidance means that they've built up a buffer on the back of the higher commodity prices. So the fact that 25% tariff increases will also apply to them for exports into the US, but they still remain committed to their guidance means that there's a healthy buffer in place.
All right, let's move over to CTM owner Italtile forecasting a rise in earnings. Would you say the improved earnings forecast could be on the back of improved consumer confidence as well as, those two-part withdrawals?
Definitely that, yes. Plus, lower inflation, our interest rates have come down. They've already previously notified investors that they are seeing green shoots. So the improvement in consumer sentiment and the lower interest rate environment bodes well for them, and they will directly benefit from that.
All right, let's just let's hit pause on the conversation, Annatjie. Before we get to your stock pick, let's reflect on some of the counters that have found favor with your industry peers.
Like Mondi, I think it's been unloved and it's been trading down for over a year now. I think it's easy to forget what a good management team this business has and what a good business it is because of the cyclicality and the attachment to Europe, which has really been struggling for growth. And they've still had a long inventory recovery cycle in Europe post-COVID. But I think we've seen the worst of it. I think we're going to see improvements. The rate cutting cycle, uptick in global growth or European growth will come. And I think Mondi is actually pricing really attractively at these levels. If you're patient, I think you'll capture a nice re-rating and an upswing in the cycle. So a good business with good track record, and I would buy Mondi here.
If you want to issue debt, you have to get that stamp either from Moody's or S&P. You need sometimes both. And you pay them to do that. Mm-hmm. So you pay them license fees. And, when you use the S&P 500 and you tap on your screen, you're paying S&P Global who issue that, So they also look at data and provide data on that. So it's a licensing company. And as things start to pick up, debt issuances pick up. So they make money. So they had very good numbers out, I think, yesterday as well. But it's if Buffett can buy Moody, rather buy S&P, much better one.
So S&P Global as well as Mondi, your thoughts on those counters, Annatjie?
Yeah, I agree with both of them. On S&P, Morgan Stanley has already noted that the stage is set for positive earnings revisions, and they've increased their target price on the company to $600. So they also reiterated their overweight weighting. So I agree 100% with that one. And then Mondi, also the fact that they provide product to defensive sectors such as food and beverages, they have access to low-cost wood. That side of the Russian business has removed a huge overhang. I agree that the long-term investment case is positive, also due to the fact that they have a very high exposure to Europe, and the investment case for Europe is starting to look promising in the longer term.
All right, so let's get your stock pick.
I still like the banking sector in South Africa. I think it offers very good value. So I'm going to go for Standard Bank on a forward PE of 7, price to book of 1.5, and a dividend yield of 6%, forward dividend yield of 7%. I really think it offers good value. And even if we do see further reductions in interest rates, then the interest margins might come under pressure, but the non-interest revenue of the bank will do well based on the fact that we expect the economy to grow at a much faster pace in South Africa in 2025 and 2026.
Annatjie, thanks so much for joining us and sharing your insights. That was Annatjie Van Rooyen from MyWealth Investments.